UK construction growth slows despite a housing drive. Welcome to Market Insight, I'm Ramzan Karmali. Well, August saw the biggest pickup in home building in nearly 2 years. But that didn't stop growth in Britain's construction industry slowing. S&P Global's construction PMI stood at 53.6 last month, down from July's 55.3 reading. Overall, the survey showed that the sector remained in better shape than in early 2024. But are more interest rate cuts needed to support it going forward? And what will be the consequences if the government's plans to build 1.5 million homes over the next 5 years aren't met? Well, to help answer that and more, I'm joined by Janet Moy, Head of Market Analysis at RBC Brewin Dolphin. Janet, thanks so much for joining us. So we've had just one interest rate cut from the Bank of England this year, and that seems to have lifted spirits in the construction sector. But what will the consequences be if, as many predict, the central bank holds firm this month?
I think it is the expectation that matters, right? So I think even if they don't cut interest rate this month, I think the broad expectation by financial markets and by economists is that the Bank of England will keep cutting, the next one being in November. And I think broadly speaking, over the next 12 to 18 months, we can expect a couple more rate cuts at the very least. So I think that expectation is very helpful to the home building sector. So you mentioned the UK PMI construction. It has slowed a little bit, but it's still expanding. And actually, if you just look at the house building component of the PMI, it is actually the highest level since September 2022. The weakness, I think, in August is driven by civil engineering and commercial real estate. So home building is still getting more robust, and of course supported by government policy of the aim of building more homes, as you said.
Now, the new UK government says it plans to build 1.5 million homes by the end of this parliamentary term. Do you think that's achievable, and what happens if they can't meet that target?
It is hard to say if it is achievable or not, but I think the goal, the ideal is there, and I think the home building industry is going to support that. I think very importantly is the regulation, whether those will be relaxed, that would help to ease the bottleneck in terms of home building. And we saw today from Vistry results that the home building is actually gathering pace. They delivered more home than last year, and I think they're also very excited about the government's target of building 1.5 million homes over the next 5 years, and their partnership model is helping to deliver that. So I'm afraid I can't really predict whether this is achievable, but I think the home building sector is, the back supporting it, and the low interest rate environment would be very helpful as well.
You mentioned their Vistry. They're known as being an affordable house builder, and their results were pretty positive today. Is it down to the fact that they are catering for a certain segment of the market?
I do think so. I think since late last year, the pivot has been primarily on affordable housing. They laid it out very clearly, and I think it really has been helpful to the share prices because it is aligning with the government's target over the next 5 years. And also, there is indeed a lot of room for home building, given that the supply of home is not enough, basically, for the population growth. And I think the partnership model definitely helps because it partners with housing association, the public sector, local authorities, which are in big need of delivering more homes. And of course, I think that pre-sale model is very helpful as well. I think they sold 90% of the homes marketed. That allows them more certainty and, of course, a better cash flow to deliver on these future homes.
Now let's move on to Asos, and today it announced a new joint venture with Heartland. That's the holding company of the Danish fashion store billionaire Anders Hulk Poulsen. The market certainly liked the news. What did you make of the announcement, though?
Yeah, I think the market liked the news because it immediately gives more free cash flow to Asos, right? I think about £120 million. That would be immediate injection to the balance sheet. I think questions will be asked later because ultimately, I think the Topman and the Topshop brand, it has been losing its relevance actually over the past couple of years. And at the end of the day, they're selling it currently valued at much lower than when they bought it in 2021. So, they're going to relaunch a new website just dedicated to the Topshop Topman brand. And they want to tap into other wholesale channels, because of the new structure. But there will be question mark on how they can actually revamp this branding, which has been in decline. Of course, the fierce competition amongst other retailers, in particular from Chinese competitors like Shein. So I think, yeah, big jump today, but yeah, hard to say how it would play out going forward.
Now, I can't let you go without asking you about non-farm payrolls data out on Friday. Would you say it's fair to say that there's an air of caution in the markets before Friday's release?
Absolutely. I think any jobs related data would be putting markets on a tightrope, basically have been so sensitive on any data coming out. So I think, yeah, markets are very cautious because if you remember, we had a not so good jobs report the previous month. So this month, if it continues to be underwhelming, then I think it will really raise concern on the unemployment rate rising rapidly and thereby resulting recession. That's not our base case at the moment, but I think if we do have two consecutive report of slowing employment, higher unemployment rate, the Fed could be triggered to put up a bumper rate cut later this month. So I think markets are will remain very cautious.
Janet Moy from RBC Brewin Dolphin, many thanks for your thoughts. And that's Market Insight. Don't forget you can watch more videos on Reuters.com.